please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's really a tug of war between Dr. Reddy's, Coal India and ICICI Bank in terms of taking the mantle for the top loser on the Nifty at this point. It keeps switching between the three stocks. But ICICI Bank is going to be in focus ahead of it. It's coming out with its Q3 numbers today, and I'm sure the street is quite worried about what the asset quality picture is going to look like this quarter. Abhishek joins in with a preview on what we can expect as well as the key numbers to focus on. Abhishek.
Well, Ekta, the key focus will be on the divergence number. Now, divergence was reported by Axis Bank and Yes Bank yesterday last quarter. So that will be reported by ICICI Bank in this quarter. So street will be focusing on what kind of number will be given in terms of divergence. Now, slippages which have been hovering around 4,500 to 4,700 crores, anything below 4,500 crores will be positive. The analysts on street are expecting a slippage number of close to 5,300 crores. Now the drill down list, which is the watch list, is at 19,600 crores. We saw one account, that is JSPL, being upgraded by Axis Bank and other few banks, and that is in this watch list of 19,600 crores, which forms about 4.1% of the book. Movement in stressed assets, that is the S4A, SDR and other restructured portfolio, will be seen closely. Now the loan growth, which came in at 6.3% in the previous quarter, anything at and above 8 to 10% will be positive. Our poll suggests an NII growth of close to 10%, while the net profit to be the lowest in last 7 quarters at 1,800 odd crores. Back to you.
Abhishek, thanks very much for that. So awaiting ICICI numbers, keep an eye out, and as Abhishek pointed out, the important things to watch out for. I mean, the 30-point cut remains on the Nifty. We are at about 11,019 right now. That's about 0.28% lower. Advanced decline hasn't broken down more. Mid-cap index hasn't sold off more. I mean, that's still about 0.75% in the red. Let's bring in Ashwini Gujral, who's with us. Ashwini, thanks very much. Good to have you here as always. Your reading of the market so far?
See, the morning's rally has failed, and it's failed not only here, but it's failed in the rest of Asia. So I think it's a matter of time before the low of the day goes and, all kinds of selling restarts. Because there was no cause to have that rally other than Dow futures were up 100 points. I think there is follow-through coming now in global selling, and whatever ICICI Bank does, my sense is, given the size of the rally that ICICI Bank is sitting on, marginal improvement in results, etc., may not help. So still a good time to get short. Obviously, take into account ICICI Bank's volatility. But my sense is that we will go through the low of the day, and once ICICI is out of the way, you'll see the real trend getting aligned with the global markets. In this sort of a scenario, will the budget do anything? I don't think so. Whatever budget you want, you can announce. Maybe you'll have a spike if it's something great, but otherwise we will follow the global markets, and maybe even harder, because we are kind of holding on because of that. So there seems to be some sort of correction which has started, and people need to take cognizance of that.
So Ashwini, according to you, a good budget won't be able to support the markets, say, despite weak global cues? Well,
he could do, equity tax to zero, but it's already zero. So what can you do better than that? See, budget, all year long there is a budget. GST, DMON, this, that. So budget is losing its relevance. Earlier, tax rates, etc. could be changed. What can you do? Some allocation here, some allocation there. If you believe, great tax cuts are coming, I don't think so, because whatever fiscal situation, etc. is there, it'll be pedestrian. And if there's a global tsunami that's coming, then I don't think any budget will be able to stop it.
Okay, fair enough, Ashwini. Point taken. What would your picks be in such a market then?
See, first of all, ICICI Bank is down 2.25%. Now, possibly something is getting expected there, and also insurance stocks are down for some reason. So ICICI Pru is a sell, with a stop of 410, target of 392. CESC is a buy with a stop of 1060, target of 1095. And Bata is a sell with a stop of 715, target of 690.
Ashwini, before we get some queries to you, do you track oil locally or the global price in terms of charts?
Yeah, I do.
And has it made a reversal of some sort or too early to say?
See, everything is correlated. If Dow continues to fall, oil will come back below 65. But if, global markets restart their rally, oil has a target of about $80. So this would be a correction in the uptrend of oil. It does not look like a great collapse. It had a great rally, and after that it's a mild correction in my opinion.
Okay, all right. So then let's sort of get you the questions which our viewers are sending in. Rajan is the first one who sent a question in. He's got 100 shares of HPCL and he's paid 300 rupees a share for them, and he wants to know the view on the stock post the government stake being acquired by ONGC in HPCL. Ashwini.
See, the best of HPCL is done. Now you can merge it with ONGC, BPCL, IOC. I don't think it will make much of a difference, and here the owners are the same. If I take money from one pocket, put it in another pocket, there's no open offer, nothing. So I think oil marketing in general, it will not give the returns that it's given in the last 2-3 years. So maybe moving on is a better idea.
Okay, fair enough. Last one is Arun wants to know the view on Karnataka Bank and Future Consumer.
See, Karnataka Bank is not the best bank, and often the best returns are given by the best banks. In this similar sort of group, maybe a notch higher, is Yes Bank. So try to get into a Yes Bank, IndusInd Bank, because these guys are in a strong growth trajectory. Problem with Karnataka Bank is bad day 170, good day 180, bad day 120, good day 180. It hasn't really broken out. It will break out the day it decides to sell to somebody. That hasn't happened in the last 3-4 years. So move to a Yes Bank.
Fair enough. Ashwini, thanks very much. We speak with you in about an hour's time again. We have to take a break, but I mean, with the news that the Nifty is down again, just 30 points. When we began, there was about a near 40-point cut. So there's some recovery. But as I said, we're basically talking in the magnitude of 30-40 points. So within that, there are recoveries and sell-offs. So keep that in mind. All right, 30 points lower on the Nifty, 11,019 is where the index is at. Let's bring in Nandita Parker, who is managing partner at Karma Capital, who's with us on the show. Nandita, thanks very much. Good morning. Good to have you with us here. We want your views on the market, but before that, since tomorrow is the union budget, I just want a quick view in from you on that. And specifically, here's the scenario. Tomorrow, the finance minister gets up and announces that long-term gains on stocks are going to be taxed. Reintroduction of long-term capital gains. What do you think the damage will be, and for how long?
Okay, so that's a tough one. It's more of a technical, short-term, I would think. Look, the way to think about it is we've had, for the longest time, zero long-term capital gains tax. And what this has done is created a certain investment horizon and scenario. If we tinker with it, then obviously we expect an impact on equities and the returns on investors. Sorry, can you hear me?
Yes, go ahead.
Hello? Yeah. So obviously there will be an impact on the return for investors, and I think that the finance minister has to be careful of who he's penalizing. Is he penalizing long-term investors? What is he trying to do with this tax? So that's one thing. To me, another big issue is, the taxation of category 3 alternative investment funds. Now, if you look at what's happening in India, there is a complete lack of clarity on the taxation of these funds. And in order to encourage the professionalization of fund management and the industry here in India, it's very important to provide clarity and to provide a basis for taxation which is on par with the mutual fund industry and other players in the industry. So I think this is of critical importance. If you look at, for example, the hedge fund industry in China, it's a size of something like 200 billion, whereas in India it's about $3 billion. So this is an industry which is really waiting for a little bit of clarity, a little bit of help from the finance ministry, and I'm hoping that this time the finance minister will, come out and make things much more certain for the industry. And another thing I'd like to point out, since you mentioned the budget, is the taxation of offshore funds. So one of the things that India has done, and I know you guys have covered some part of it, is that we have exported our fund management industry abroad. And a lot of funds are managed outside of India, from Singapore, Hong Kong, Dubai, London, New York, so on, because of certain conditions. So the finance minister 3 years ago said he would like to bring the offshore fund management industry to India, and it's time that they walk the talk and provide safe harbor for funds and bring the fund management industry back to India, which will create jobs, will increase taxation, and partly fund some of the shortfalls that they might be looking at.
Nandita, how important will the fiscal deficit figure be, according to you, for FY18 as well as FY19?
Well, it's fairly important. I mean, now that we are on a path of fiscal prudence, and there is a set target, and the government has been able to keep the targets, this is obviously inspiring a lot of confidence, whereas global investors are concerned. So I think the direction is important, and the type of spending is very important. So more of the spending going into capital spending instead of subsidies. That's certainly been a shift in this government's policies, and I think if we continue that path, then global investors will certainly look at that.
Staying with taxation, but this time corporate taxation. In 2015, the finance minister said that we'd like to bring corporate tax rate, headline corporate tax rate to 25%. I mean, now is 30 plus surcharge, etc., is 33%. Do you think, realistically, do you think that we will see a big shift there? Or again, it's going to be some sort of a roadmap which the finance minister is going to provide? Or he will say that, okay, starting FY19, corporate tax rate is, down from 30% now to 25%. Is that possible?
I mean, it's certainly possible, the third scenario. Yesterday you heard the CEA say that India can't ignore what's happening in other parts of the world, and with the US bringing its taxation down, corporate tax down so dramatically, it behooves India to follow on the path that they a couple of years ago. So I think it's not out of the realm of possibility, and I would certainly hope that it happens this time, because this may be the last time we have a finance bill and a budget before the elections. Okay.
Nandita, just focusing on the markets now, it has been a correction, but we are, singing to the tunes as of now. What's your sense? Do you expect probably a further correction from current levels? And are we just singing to global tunes, or do you think that the budget would be enough of a resilience for us in case it meets expectations?
Okay, so the way I'm thinking about it is in the framework of fundamentals rather than technicals. And when you look at that and you look at a correction, you go, wow, I need to raise more money and put more money to work. Because this scenario that we are enjoying today is very unprecedented for Indian markets. We have had a very real rally last year, but what's happening is that earnings are also for the first time showing a lot of strength, and this scenario where interest rates are benefiting the companies, capacity utilization is higher, margins are expanding, cost of capital is going down. This is a Goldilocks scenario for India, and I don't think that is going to change in the near term. So we're looking at a multi-year cycle, and we should expect a couple of corrections during the course of the year, and I don't see anything majorly structural, at least here in India, to worry about.
And briefly, Nandita, do you think that we are maybe at the cusp of first such correction?
It looks that way. I mean, it looks that way. I mean, certainly feels that way. And in India, I mean, other than the index, a lot of stocks have fallen, 10 to 15%. So, that's par for the course. I've been running this fund for 14 years. And like I said, we're used to having 2 corrections a year, except that the fundamentals are much stronger this time. So I think if there is even a mild correction, there will be a proclivity to buy sooner rather than later. So I don't expect a very significant correction.
Well, AU Small Finance Bank is in focus on account of its Q3 numbers. We have Sanjay Agarwal, the MD and CEO of the company, to discuss their quarterly performance. Mr. Agarwal, hi, thanks very much for joining in. Let's start with a couple of parameters such as asset quality. That's improved this quarter to 2.83 versus 3.08%. Tell us about what happened this quarter and the expectation going forward.
No, I think overall our quarter performance is at par. Whatever we estimated over the year, right? It's 9-month performance. Asset has grown by 38%. Disbursement has grown by 45%. Our profit is largely unchanged from year on year, in spite of our year transition to bank. And asset, as I last time also told you, that economy is getting settled down. There's a lot of vibrancy is available in the market. A lot of businesses are being settled down. So our NPA has come down and it's around 2.8 in comparison to 3.1 last quarter.
So across the main business segments, be it vehicle loans, MSME, SME, could you give us some color and any pressure points in each of these 3 areas?
So I'll say that, the whole pressure point around economy has gone down. Honestly, the GST has settled down. There's no effect of demonetization. And last 2 quarters, we have seen quite amount of traction around commercial vehicle sale, personal vehicle sale, and there is enough money available with the customer, right? So I think that's why the NPA also has come down. So I don't think much of the pain areas here and there, smaller here and there, but largely we believe that this story will continue, and we are all expecting this and maybe next year to be more robust in terms of our infra spending, in terms of our commercial vehicle requirement, the MSME and SMEs.
So you expect this kind of disbursement growth that you're seeing and asset under management growth that you've seen for the first 9 months to continue into FY19 as well?
So I think this is a position which we have maintained, I think, from last 1.5 years, that because of our base and because we have become bank, there is a lot of pull which is available in the market for us. And we believe that our MSME and our vehicle segment should grow in the range of 30 to 40% or maybe 35 to 40% range. And that is being continued from last 3 quarters. And I believe that next 3 to 4 quarters will also be like this.
What is the dependence in terms of funds that you raised from? You're wholesale dependent, and it was expected to come down gradually. Could you just talk about that?
Yeah, so our treasury is well balanced. You know, we have already raised around 3,700 crores from deposits, and out of which around 35% is our CASA. So I think our retail liability is shaping up well. We already have around 300 branches across 10, 12 states. So we are believing that, I think there is a little bit pressure on the interest rates as we move forward, but largely money is available in this small pocket. And I believe that as we move forward, you know, our franchise will be more visible, franchise will get settled down in terms of our process, product, and IT. I think there will be good traction around our deposit base also.
Okay, all right, fair enough, Mr. Agarwal. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the management of AU Small Finance Bank. That stock is down around 3.6%, but it's in line with a lot of the broader market stocks falling. Like I've been pointing out, HDFC Standard Life, Syngene, which is down around 3.8%, not much in terms of volumes, but nonetheless, Jubilant Foodworks as well, that stock down 3%, and TVS Motors, that stock has corrected around 3% today as well. Take a break, but more on the markets once we're back. Stay tuned.